They haven't put, they haven't put on new. Hmm? They haven't put on new. They haven't
That
put
initial poster, no? Because that was done already. They possibly had put quota. In,
Hello, friends. You're watching etbfsi.com, and this is a special episode on Union Budget. As you know, that the Finance Minister has delivered the Union Budget today, and there were a lot of expectations which the industry, the economies, the finance leaders, and the India Inc. had specifically from the budget. Although apart from the capital gains on the short term and otherwise, there are no major challenges that the people have seen. In fact, one of the important problem that the government has tried to solve in this particular budget is the employment and skills. Obviously, the devil is in the details and how the industry will execute
Yeah.
it the most. But as of now, there are various reactions that we have received, which says that this is a budget which is actually quite in line with the India's growth story. I have great speakers with me, which will help me decode and help you understand what is there in the budget. So let me welcome all my speakers, the guests for you for this particular session. My first guest is Mr. Indranil Pan, the Chief Economist of Yes Bank. Indranil, glad to have you.
Yeah, thank you very much.
My next speaker is Mr. George Alexander Muthoot from his MD of Muthoot Finance. George, glad to have you.
Thank you. Thank you. Glad.
My next speaker is Mr. Pranav Haritsan, MD and CEO of Access Securities. Pranav, glad to have you.
Thank you, Aman. Thank you for having me.
My next speaker is Mr. Sharad Mathur, MD and CEO, Universal Sompo General Insurance. Sharad, glad to have you.
Thank you.
We also have Ratan Kumar Kesh, the interim MD and CEO of Bandhan Bank. Ratanji, glad to have you.
Thanks, Amol. Thank you.
And I will also have Manish Kothari. I think there is some network issue joining us. He's the President and Head of Commercial Banking from Kotak Mahindra Bank. Gentlemen, let me begin with the economist first, and Indranil, I will come to you. Not only India, but the whole geopolitical tensions are, quite disturbing, and India's macros were actually quite, interesting. Considering all these challenges, and the fiscal prudence policy that the government has adopted, do you think that these initiatives of government specifically taking India forward?
I think the first thing that needs to be pointed out is with respect to the fiscal prudence. Now, obviously, they have been blessed this year with a humongous surplus dividend transfer from the Reserve Bank of India, which, along with the relatively robust tax growth that we have seen, is helping the revenue side story, which can be deployed, therefore, in terms of the various schemes that has been employed. Now, therefore, the challenge in terms of the funding becomes relatively lesser. But having said that, I think a big thumbs up to the government for having decided to sort of try and achieve both. One, in terms of the fiscal consolidation strategy, and from a 5.8 to a 5.1 was what was projected in the interim budget. Now they have moved from a 5.6, which is the provisional actuals that they have come out with, to a 4.9% in the full year budget. So that I think is a quite a sort of robust move in terms of the fiscal consolidation story. And what the finance minister also points out is that they are trying to target a 4.5% by FY26, and also attempt to keep the fiscal in or the borrowings in such a way that it reduces the debt of the Indian sort of economy from a sovereign perspective. Now, in terms of the growth strategy, I think, therefore, this was the perfect time when the government needed to take certain decisions in terms of the next 5 years journey. So this is a budget, a blueprint for the future growth strategy of the economy. As you rightly said, they've attacked the employment issue. And more important to me than the employment side of the story is the skill mapping that they are now attempting. Obviously, it's a journey ahead that we need to sort of see and the type of implementation and type of sort of outcomes that we can generate. But it's a step in the right direction, simply because the manufacturing sector and a lot of other sort of segments, including services sector, were actually bothered about the fact that yes, people were coming out from the high schools and going into colleges and were graduating, but the skill mapping was not really adequate amount enough for employability to happen. So that I think is a very prudent sort of
Great.
step that has happened, which will improve employability. And I think the across the budget, the general sort of direction or the spin that they have provided for is productivity growth. The challenges of productivity has been across the segments, which starts from agriculture, where we have being the highest sort of producing nation in terms of volumes or outputs, but our productivity compares relatively quite poor to many sort of other economies. So that is something that we or the government is trying to address now in terms of the productivity of the agricultural sector. And all the I'll not go into all the details, but they've set up a master plan to try and achieve this, including the R&D and acknowledgement that climate changes are happening, and therefore weather resistant crops need to also be sort of pushed. The other area, I think, on a broad macro perspective, is the MSME, which I think they have actually sort of come back with the guaranteed loan structure for the MSMEs. And data clearly actually shows that after the each CLGS went out, there has been a drop in how the banking sector or the financial intermediary sector had been funding the MSME segment. So that's something that will possibly push the growth story sort of further. My last point here is that, very interestingly, for macroeconomists like us, when we sit with the economic survey and go through the economic survey, we broadly think what are the factors that can actually come from the economic survey into the budget. This is one time we are happy to see that there's a lot of reflection of the economic survey and the strategies that have been laid out in the economic survey finding their way through the into the budget.
Indranil copied you. I will come to you again specifically on the freebies, which the government has specifically tried to avoid and focused more on, a rational spending. But thank you so much for adding and giving us a tone to run this conversation. And you mentioned MSME, and that is another segment which the government has tried to address apart from the employment and skills. And let me bring Ratan here. Ratan, Bandhan has a strong focus specifically on the micro segment. So tell us, the government has spoken a lot about how banks should in fact create different models of assessing the MSMEs, creating their own desks for the credit revision and everything, so that the credit can be disbursed at the faster level to the MSMEs. Obviously, few of the things for PSUs, but it's a large segment for the Bandhan and specifically private banks as well. So how do you see the government's push for the MSME credit?
Yeah, so Amol, I think Indranil has sort of outlined the most of the major policy announcement and its implication in the overall growth story that the country has been pursuing for quite a few years now. More specifically to MSME, the belief is that there has been a significant amount of capex over the last few years. It has gone up from say 13% in FY29, FY2019 to 23% this year. So government has been spending on capex, which obviously has a bit of a lag effect. And today there is the right ambience with the fundamentals being very, very strong. There is the right ambience for the private expenditure to kick in. So to that extent, the focus on MSME and some of the initiatives and the policy announcement that the government has done will really help all the three partners in this case, the banks, the MSMEs, and the consumers to get the benefit out of this whole scheme. I think that's broadly is the message, number one. Number two, clearly for banks like ours, we have been focusing hugely on the micro and small sector, essentially also rural and urban housing, which anyways kicks in more and more of spends and capex, as well as manufacturing growth. Very specifically, the agri focus and urbanizing the agri, bringing technology and agro research, and really making agri resistance to some of the weather aberration. These will also help in spurring the growth at the bottom of the pyramid as also the middle sector. So I think that's clearly the government focus, and I think banks will be more focused around extending credit to able to support that growth in the country.
Sure. When we talk, I mean, we have specifically thought about the theme for this session was taking India forward, considering the map of Vikasit Bharat and the strategy that we need, to have India as a developed country in few years. So, Pranav, what is your view? The policies that the India has crafted specifically in the interim budget and this particular budget, because we are talking about Amrit Kal, Vikasit Bharat, and the reduction in the corporate tax, but additions in the capital gains tax on the short term side. How do you see the market is going to react to this? Obviously we have seen a great cycle today itself, but on a long term basis, how do you see? Do you think that the abolishment of angel tax, reduction of corporate tax will actually help foreign investors to flock over Indian market now?
Hi, thanks, Amol, and thanks for having me. I think it's a good question. There are two ways I look at this budget, right? One, I think it's very important for us to really look at it as interim because we're almost like 4 months into the year. There was a capital outlay that was laid out in the beginning of the financial year. Obviously, given it was an election year, it was expected that there was no major announcements that you would have expected at that time. But having spend 4 or 5 months through the year, you've got reasonable visibility, I would imagine, as a government on what are the capital expenditures we're incurring at the moment. So in that sense, I think expecting a dramatic change from what was announced in Feb at the end of July, when you have a budget coming up in Feb of next year, I think from a capex perspective, maybe market was pricing in a bit too much, I would think. And and we saw that in a certain sectors, a lot of euphoria just going in over the last 2-3 months, and you're seeing some of that froth getting it's just sort of correcting today. But having said that, I think the market has been extraordinarily resilient, both through the election results that we saw and through the price action today. So we haven't really seen anything that I would really worry about, despite some of these changes we've had. Obviously, on the margin, the STT increase and the long-term capital gains were slightly unexpected because the history to the long-term capital gains was that when STT came into practice, it was seen as sort of a replacement to that potential capital gain. So I think slowly we are just back to we put back the long-term capital gains, and now sort of tinkering with that might be seen as a slight negative, but I think overall, just across the board, there's just so much policy continuity, especially on the fiscal deficit side. Across sectors, there was a lot of support, reasonable support on the manufacturing side. I think the duty cuts on the customs side, a lot of that is just the continuity is what most investors really want. And I think in that sense, it's been a reasonable budget from an investor perspective. Now, on the taxation, I have a few thoughts on this. I think there was a positive element that finally we're seeing some parity come in across asset classes, etc. And there's an effort to bring that parity in. So in that sense, it's actually, I think, a positive. It'll be seen and taken well as market digests this. But yes, I mean, from an equity market perspective, I think that short-term capital gains going up from 15 to 20%, and then the long term moving up a little higher will be negative, and will take a few days to digest. But I think just given the amazing resilience we've seen over the last few events, I think the fact that if absolute returns can be made just because the overall economy is growing at that kind of pace, I think market will shrug this and move on.
Sure. Thanks for adding that investment perspective, Pranav. Let me move to George directly and try to understand, what actually Ratan and Indranil also highlighted specifically on the MSME side. So, George, I want you to focus more on the micro loans, the Mudra loans specifically, the segment. The projection and the whole estimation has been doubled, by the governments in this particular segment. You are operating in this segment. How do you see this translating into the economy? Do you think a lot of people will bang on your door now?
Thank you very much. I think, first of all, let me tell my two bit about the budget. I think it's a nice, soft budget. I should say a soft budget. Nothing great, no great nothing dramatic, either as taxation or concessions. Nothing dramatic, just small tinkerings only. I think in that sense, this is a good budget. And one or two things which actually caught my attention was probably making things easy for the taxation, etc., income tax, etc., to make it a little more easy and manageable. So probably some, I don't know whether I have got it right, some government's appeals, etc., government's appeals to tribunals, etc. There have been some marked policy directions that unnecessary appeals, unnecessary litigation should be avoided. I think that's definitely a step in the right direction. Of course, ease of doing business, one of those things also counts. And of course, the reducing the tax on the or the excise duty and tax on the duty on the gold. I think that should spur some demand for gold, which ultimately the jewelry will people purchase jewelry and probably use it to take a loan after some time, though. So there will be a correction in the market for the price, but I'm sure after a week, after 10 days, it will all go back to normal because this is not the gold price is not dependent on the Indian tax alone. It depends on the international price also. International price is so volatile today with so much of geopolitical tensions, so it's so volatile. So having said that, yes, the speakers all have been intervened, etc. I've always been speaking about the MSME sector. The MSME is something which government is actually focusing on, and the jewelry loan or the gold loan, where we do 95% of our business is in gold loan. So there we see a lot of growth coming in. Even now there is a lot of demand because I personally feel that there should be rural demand, rural purchasing power. Then only all the purchasing power, unless purchasing power is given to the rural and also the lower strata of society, the demand will not perk up. If the demand comes, then economy will perk up, economy will rise. All those things also on the demand also. Today, India, there is no shortage of any goods. There is no shortage. It's only the purchasing power, and the purchasing power is what bankers and non-bankers should be able to give the people. And gold and gold jewelry is one good vehicle for putting purchasing power in the hands of people. As a gold loan focused company, we have been able to do that to a great extent, that we have been able to monetize the idle jewelry, etc., which actually helps people, the MSME, the small businessmen, even small consumers. Everybody makes use of that. So I think, as I said earlier, there's nothing great, no great taxes, no big concessions, almost a soft budget. And I think a soft budget is also good for the country occasionally. You don't need to have very hard budgets either in taxation or in concessions. So it is almost neutral. And keeping neutral will also help the economy. So my sense is that this will be good for the economy.
Sure. Sure, George. Good to see you, Manish. I will come to you very soon. But let me move to Sharad now. Sharad, nothing major for you actually. When we look at the whole, the budget, there was nothing specifically for you in terms of the health insurance or the general insurance. But like George also mentioned some time back, the purchasing power, right? The people will perhaps get more jobs with the employability and the skilling part and everything. Do you think that would be beneficial for you? And more importantly, if you allow me to ask, specifically, are you feeling sad because there is specifically nothing given for health insurance in the whole budget?
Thanks, Aful. Firstly, budget is progressive because we see that if there is overall economic progression, so it will some way going to support insurance sector and likewise every sector for that matter. We have seen that increase in standard deduction in the new tax regime from 50,000 to 75,000 is a welcome move and will surely going to help the middle class in marginal gains. So, however, the expectation, as we have rightly said, that we are still hopeful and will remain, industry was looking for a waiver or reduction in GST and for tax deductions raised to 1 lakh, because this would have directly helped and directly brought an uptick in insurance offtake, especially in health insurance. So we are not too much worried about other sectors, but as we are aiming for insurance inclusion by 2047 and focusing from the health insurance perspective, which supports the social security as well, as we go covering entire population with our objective. So also, given the ongoing public health challenges, there was a hope, that more robust support mechanism for health insurance, including subsidies, incentives to broaden the coverage. And India is at a pivotal point, we believe, that where insurance premiums are growing as a result of post-COVID recovery and health sector inflations. So this is the reason it becomes all the more critical for health insurance to attract such support. And in
Noted your
addition,
points.
FDI limits, it would have turned, it would have been much better.
No, sure. In fact, it's really surprising that every year I'm not talking about any other benefits, but specifically, I think the GST, which earlier was a service tax, not more than 12-13%, but immediately after GST, it became 18% of the health insurance policies. I think the industry has been demanding to rationalize that. But anyway, perhaps government will look at it very soon. Let's hope that. Manish, good to see you. And let me come to you now and learn more from you in terms of the corporate growth. Obviously, there is nothing direct in terms of the ease of policy or some about credit growth. But what we have seen is there are a lot of incentives, specifically for the manufacturing, renewable, solar, and such kinds of industries. Do you think that such initiatives will add to the corporate growth going ahead? And how do you think the corporate India will react in terms of the credit, in segment to the budget?
Yeah, I am also the way I see it is some of the pieces that you talked about are more related to the green energy piece, but overall, I guess the corporate sector for them the reality is more from the perspective of how consumption really picks up, how overall employment, how exactly the overall economy really grows, which is more wide rather than only in a particular specific area. In my view, from that perspective, the specific thing with respect to maintaining capex of that 11 lakh odd crores, which has a multiplier effect all across. Similarly, in terms of agriculture produce with respect to focusing on improving productivity, looking at how the government has come out with specific things to kind of boost exports, reduce the import piece with respect to specific areas. I guess those are the pockets where we will actually see more growth coming in. But overall growth across the private in terms of investments coming in from there, and while last 2 years we have seen per se there being investment growth coming in from the private sector. But I guess for it to really come in a big way, balance sheet is not the problem, capital is not the problem, availability of financing is not the problem. I guess it's only getting the confidence more from the point of view of some of the long-term pieces really kicking in, which is from the perspective of inflation, interest rates getting more appropriate. Then we will start seeing something which is possibly across all sectors. Otherwise, I would say that specific sectors will definitely see more investments relative to other sectors, which is like infrastructure, tourism-related sectors like hotels, or specific sectors where there are PLI schemes which are running, and there are a lot of investments coming in, or sectors which are related to exports. And so there will be opportunities which will be more segment specific, and where we will see more possibly investments really going in. That's how I see it.
But Manish, quickly, very quickly, since you mentioned, highlighted the challenges, which are not the challenges actually, availability of capital, availability of funds and everything, and the credit, but still the corporates are not coming forward. Do you by any chance think that this budget gives them the promise and the confidence perhaps to come to you and maybe you will sign your checks, all the checkbook, maybe in next couple of days. Is that going to happen? Do you see that?
Checkbooks are not an issue. Like I said, balance sheet of corporates have been reasonably strong. Yeah. So over the last 2-3 years,
Right.
actually, it has only gotten better. So that is really not the challenge, or that is not really coming in the way. This budget is definitely, from the way I see this budget, this is absolutely government staying on the course. Yeah. So effectively, something which is good for long-term nation building. I don't think that you will start. They have not made any big bang announcements to say that, okay, which will start attracting capital investment in droves, right? So there are pockets which the government is addressing, and I'm quite happy with it's more like a bottoms up strategy than a top down kind of a strategy, if I were to use the word, where they are saying that the larger masses should be kind of brought up, yeah, for the overall economic growth to really sustain over a longer period of time. And so whether it is growth and expansion of MSMEs, because eventually MSMEs provide more than 75% of the non-agri employment, right? Agriculture as an engine for growth, because very large percentage of our population stays in the rural areas, and the agri and allied sectors, they have kept their allocation there. And again, they have pick the pockets there to really say that, okay, how can we really support those sectors? A very large percentage of population is coming into employment for the first time, so there is specific schemes to kind of push corporates, or get them employed and kind of provide that support. So there is bridging the skilling gap, the education employment gap. So very, very foundation building steps is what the government has taken. I would say that that is something which is what is needed for long-term sustained growth. And once you start to see that manifest in terms of sustained economic growth, you will start seeing dramatically more in private investment really coming in. I would say inflation will start to look better, and all of that. And the government has done the right thing in terms of maintaining fiscal prudence. Still talking about less than 4.5%. Eventually, they're meeting their targets of fiscal deficit, working on ensuring that the firing up trade to get the trade piece right in terms of the balance of imports versus exports. So I am pretty happy with the overall focus on multiple aspects which will deliver sustained growth, and I would say capital will come. You will start to see private sector really coming in as the confidence really starts to build, and when things manifest on the ground.
Absolutely, Manish. That's what I wanted to know, and great that you highlighted that point, which is quite positive. So, Indranil, let me come to you. My Perhaps I don't have a specific question, Indranil, but I just want your broad view now. Uh, you mentioned that the suggestions that the CEA had mentioned in economic survey have mostly translated into the budget, but the economic survey spoke about a lot of things: unemployability, the people are not get great salaries, and so on and so forth. My question to you, or maybe I want to understand from you, is considering India is now moving forward towards with a strategy of fiscal prudence, but the per capita income of Indians is very, very low. Still there are no jobs in organized sector. Obviously the employability and reskill strategies will take some time. Considering all this thing, do you think that the government can afford not to go for high PLI schemes with maybe large more segments, not to go for freebies and revenues as we say it? Do you think that it's the right approach now?
Well, I think I'll try and answer this question in a slightly different way, in the sense that if I really look at the PLI schemes, most of the PLI scheme coverage in terms of the sectors were in the capital intensive areas, and the critical beneficiaries of these PLI schemes were the larger manufacturers. Now, I've seen some data floating around somewhere that in terms of the utilization of funds that have been allocated to the PLI scheme, not much has been in terms of offtake, and whatever has been the offtake, it has been more towards the hardware and the mobile manufacturing segment,
Right.
where again a significant proportion of the inputs that go into this segment is actually imported, whereby meaning to say that the value addition with whatever outlay is happening in these sectors may be relatively low and may not justify the amount of subsidies that the government is putting. Now, cutting across that and focusing on today's budget, I think what they have tried to focus on is the very fact that India is very reason why we call this as an Amrit Kal for India is the significant amount of accretion of youth into the labor force. And unless you find feasible and proper formal sector employment opportunities for these people, it would also be very difficult to address the per capita income, which is at the bottom line the most crucial functionality in terms of boosting consumption in the economy. Manish did mention about interest rates, but we have also seen phases in India when India was unshackling the initial part of the reforms phases when we had a high positive real rate, but still there was a lot of investment that was coming in. And possibly that investment was coming in only because the demand visibility was relatively strong. Now, today, the visibility of demand, both from the domestic side and the external side, is relatively on the weaker side. And therefore, despite banks' balance sheet being on a stronger footing and corporate balance sheets being on a stronger footing, it is possibly getting very difficult for the private sector, except for a few sectors which are clearly beneficial of the infrastructure spend of the government. Beyond those sectors, it's very difficult to see a general impetus to invest and build capacities in the private sector. So I think in a large population economy where there is significant amount of inequalities, the first attempt has to be how you actually bridge the inequality gap, how you bridge the gender gap. And to certain extents, I think this budget is a right direction in terms of addressing these issues. For example, if you see the way they have addressed the women in labor force,
Yes.
the way they have sort of highlighted that one of the reason is that the poor sort of work culture for women, the safety of the women, which necessarily they are talking about building up sort of accommodations near factories, creches for the women, to help them even during childcare. So these are some of the direction where you bring along a larger segment of the population within the growth fold, which not only increases the national product, but also increases the per capita income of the economy, which I think is the most essential bit if the economy has to take advantage of the demographic dividend and grow. We have been missing the bus for a significant period of time. And I think this is the last option, the last phase of the 3 decades that we have, when that crossover will again happen by around, say, 2050, when the dependency ratio in India will again start sort of moving on the higher side. And this is the phase that needs to be utilized. And therefore, we talk about productivity. Therefore, we talk about skill development, how this, not only skill development, how the mapping of the skill needs to happen. Therefore, we talk about a private public participation also, and a joint effort in creating employment for the society. And I think that is something, again, it's a work in progress. It should be a work in progress.
Right.
Everything of these can't be done overnight, but I think it's a right step in the right direction, if I may put it that way.
Absolutely, absolutely, Indranil. So, Pranav, let me come to you. There was one interesting thought that the economic survey had mentioned was to allow China's FDI in India. And in fact, it said that the government should take initiatives not only to develop trade, but also allow Chinese to invest heavily into India. I'm giving China as one perspective, Pranav, but also about the foreign investors. Do you see with this budget, you partly had answered, but I need some specifics in terms of India's growth now. When we talk about the $5 trillion to $10 trillion economy, which will double in the next 5 to 6 years, do you think now China and the other countries, are very going to be very happy the kind of strategy that India has laid? And secondly, on the first part of China FDI, do you agree that such moves will perhaps attract more investors?
Right. No, but thanks, Amol. So yeah, I think the question really is, should we broad base our FDI from just across different countries, and will that lead to just more inflow? Because obviously we need a lot more funds in this growth phase, especially in the capital formation phase, right? So the answer is yes. And whether if it helps, and given that China is a very, very important supply chain partner, there is a need for us to work more closely with all of these countries, but especially given the manufacturing hub and the close synergies that we will have as we build out our manufacturing capability. That's the first part of the question. The second part is it, what does it take to really to go from 5 to 10 trillion? I think honestly, we've done a lot in the manufacturing side in the last few years, but competing with some of our neighbors, especially that have built some phenomenal capabilities and competencies over time. These are structural, and it takes time to bridge this kind of gap. So I think there is still a lot of work to do. And I'm not sure if that work can be done in a budget, right? It needs to be done. It's participation across the board. It's a culture that you build. But I think the most important thing, and there was a point that I was making earlier, is policy continuity. Like, can you really demonstrate policy continuity? I think the question that we were all asking sometime in June when this government was coming to power was, just given coalition arithmetic, et cetera, will you see a change in the way they enact policy? I think the one thing that is not spoken about today as much is the fact that continuity is largely in place. We don't see any change in how they operated in the last budget, in the last to last budget, and so on, right? So I think in some sense, from an investor perspective, that's what you're looking for. Obviously, it's a little bit disappointing, like I said, on the taxation front, which might in some sense is really marginally disappointing. But I think from a policy perspective, in terms of FDI, in terms of foreign interest in India, I don't see anything in this budget that should disappoint any of us, any of the stakeholders. And in fact, most of the attempt has been to just accelerate and grow this. Now it's really for us to demonstrate some of these actions on the ground, build the capacity, build scale, build, quality skilled workforce. And I think that's something which we've tried to address a little bit in this budget, but that will be very, very important as we scale. Do we really have the capability to compete with some of them in terms of the talent we bring through into the workforce? And we're also dealing, obviously, with, Amol, I think the other area that, again, is a little underappreciated is that we had the 2 years of COVID. We were coming out of that. And I think as an economy, we've done well versus a lot of our neighbors and, and some of the other emerging markets as well. So in that context, you also have to deal with that flux of, labor force that you had that came into the market in those years. So I think solving for that is an important thing. And the budget is trying to address some of that. I really hope that the implementation of that will be as seamless and and really help solve for some of the employment issues we've seen.
Ratan, can you give me yes, sorry, apologies. Ratan, can you give me some more thoughts specifically on the NCLT, which was a large demand that the bankers had from the government, and also the IBC board, that the NCLT should have been strengthened, which the government has tried to resolve this. Do you think that it is going to help banks now in terms of resolving the more cases?
Yeah, thanks, Amol. So I think before I go to the NCLT and IBC, let me just quickly say that the beauty about this year's budget is that there is a broader consensus, and all the fellow panelists have spoken about a few things which are a common narrative and the theme that the government has been trying to do, both really taking learning out of the economic survey and how it gets translated into the budget. So clearly, budget does not talk about big bang few announcement, but very small initiatives and announcement which will be easy to implement. Second, clearly, government got the fundamentals right, good macro backdrop, and therefore there was a need for policy continuity, and government has made sure that that happens. Clearly, there is a 5-year goal announced, and that will ensure there is policy consistency. And what Pranav was talking about, the fact that we will be building skills, etc., and there are significant focus at various layers, it will really demand and it will really encourage a lot of the foreign investments. Now, one of the
Right.
important points about IBC and NCLT has been it's a good scheme altogether. Everybody got hugely encouraged. But the amount of time it was taking to really resolve some of the cases going to IBC, it was frustrating for multiple stakeholders in that entire chain. To that extent, there is an attempt made at least this year. We'll have to see how it gets effectively implemented. There is an attempt to see how to really remove the shortcoming and the bottlenecks in that entire chain. And if we can remove some of the bottlenecks and get these cases resolved faster and the decision is taken, it will clearly help the banks as also the other stakeholders in the supply chain.
Noted your points, Ratan. So Manish, let me come back to you now, and if you want to add something on the NCLT IBC, because this was a big issue for banks, please feel free. But I also want you to focus on many other aspects which the government has trying to do directly, indirectly, by building industrial parks, by infrastructure, not only of the roads but also building temples and building smart cities and all. So all this focus specifically on the consumption. Do you think will help banks also maybe to increase their credit spend going ahead? Do you see a lot of continuity in credit, not only from tier 1, tier 2, but also in tier 3, tier 4 cities going ahead, because the focus on the SMEs, MSMEs also large? Manish?
So, you asked for two things. So, from an NCLT point of view, the big takeaway
Yes.
for me was adding to the capacity in terms of more tribunals, more judges, right? So, the capacity is definitely was an area of constraint. And if they are looking to address it, I guess that's an added piece to what I guess Ratan shared, which I think should really help. From the point of view of MSMEs, I guess what I picked up, which the government is trying to really push through, is two things. Because when you look at MSMEs, 6.4, 6.5 crore MSMEs, 90% plus is like in micro enterprises, which is most unbanked still, right? So that's the space, which is the area which is where banks are not really touching. And there are two things which I picked up from what the FM said. One is about how about providing a guarantee scheme or to provide funding without collateral to these micro
Okay.
enterprises which may not have a GST return or which may not have a very clear annual report available with them, etc., and no collateral to offer. And that's where the guarantee fund will really come in terms of handy for banks to really look at sharing of risk. The government is sharing the risk. The second
Right.
piece is to say that how can public sector banks, I guess a lot of fintechs and private banks are
Yes.
also already doing it, say that how do you really use the digital trail that is available to create a lending methodology where you can really look to fund these MSMEs. Yeah, and a lot of these will be effectively micro enterprises. And I would say that that's a very, very strong positive, because today there is digital trail available in some form or the other, and you can really create a scorecard to look at distributing small ticket credit. And third thing, they brought the TREDS limit down to 250 crores in terms of corporates who have to compulsorily come on TREDS and provide where there is a financing which is again available to these small enterprises who are technically catering to the slightly larger companies. So I would say these three things should definitely help more credit flowing into that particular space. And I believe that it should really help overall employment creation, as well as strengthening the some of these small companies moving into a much more organized space in terms of getting the financing.
Right. So again, credit has become a key point and integral part of the budget, no doubt about it. Sharad, if I ask you specifically about, you mentioned about the relaxation specifically, we discussed when GST and all. Going ahead, obviously, which was not part of the GST, do you think that, which was not part of the budget, what could have government done specifically for health insurance sector, Sharad, if not specifically in this budget?
So, still in our country, if you see, there is a lot of awareness gaps. People post COVID have started understanding the need necessity to have insurance, whether health insurance or insurance for their assets. But still, especially health insurance, when we go to hinterland, people are still not fully aware that there is something like insurance coverage, whether via government schemes like Ayushman Bharat and so on, and they will remain protected, covered in case of any hospitalization. So doing ongoing campaigns to popularize insurance coverages and benefits that customers will, policyholders or everyone in the country may get. So these are some of the things which we still feel that apart from GST or core financial impact, if we can have these indirect support from the government, which would drive insurance penetration and support us to reach out to people at large. And also, I believe that in addition to health insurance sector, overall insurance sector, so there are insurance provisions provisions in the insurance bill, which would remain very pivotal for the sectoral growth, like composite licensing. One entity is able to sell life insurance, health insurance, non-life insurance, and likewise minimum capital requirement. So minimum capital requirement currently stands at 100 crores. So for in the industry with low barriers, it would make it very easy for smaller and new players to come in. And also introduction of value-add services. If insurance are able to sell value-add services, which includes maybe financial products as well, like mutual funds, so that would create additional revenue stream and would going to strengthen the overall
Right.
And one-time registration for intermediaries is something which has been in demand, since quite some time, because this would become part of the act, and we hope that this would going to happen, which would bring a lot of reduction in bureaucratic hurdles and would help us to expand our distribution network through individual agents and point of sales persons across rural pockets of India, because there only it would make a lot of sense for insurance sector to achieve insurance inclusion India wide. And also we are sure that simplification of investment related conditions, where
Right.
we know that proposed amendments also aim to set all investment requirements, restrictions for insurers through regulations. This would also to foster a more dynamic and responsive investment environment. And additionally, potential liberalization of investment rules may support acquisition and growth of insurtech companies, which can drive innovation in addition to whatever innovation and tech labs all insurance players have in house. We also have hopes that there would be rationalization in solvency norms. So this would, for policyholders, this means improved risk management through tailored solvency requirements for various insurance products. So this will, some of these things would going to really help the sector progress. And we are sure that not part of the budget, but we think these things will going to unfold to the advantage of the sector and its growth.
So thanks, Sharad. George, slightly broader perspective that I want you to give is the focus areas were for employment skilling MSMEs and middle class. We discussed employment skilling MSME, quite I think in detail in this. How do you think the middle class is going to benefit out of this? Obviously, I'm not going to ask you about the new tax regime as such, but the overall policies that the government has crafted, from gold to education loans to mudra to MSMEs and everything. How do you see the whole translation specifically for middle class? Because your large customer base is a middle class.
Yeah, thank you. But before going into that, I just wanted to say something on the budget recommendations. See, during the budget speech, the finance minister definitely said that they are simplifying the tedious tax reduction at source. That tax reduction at source has been simplified. So they have taken some steps for that. Some compounding has been permitted, etc. Tax not tedious not made, etc. But there was definitely a great demand from our side that the tax deduction at source, which started from last year for listed NCDs. The listed NCDs were not, there was no tax deducted source till 2 years back. Last year they have introduced this tax, and that has created a lot of confusion in the small investors. So small investors today, everybody is talking about deepening the bond market. Deepening the bond market. Today, bond market is not really being used by the armed law. Armed law is not using the bond market because of some of these things. And one of these things which is actually nailed in the coffin is this tax reduction, because the secondary market for this NCDs is not there because of this tax. So when somebody is tax is deducted at the last person, the tax is deducted, and the full tax is deducted from the last holder, it's a big problem. So because of that, people are not interested in that. So that is one thing which could have really helped the middle class to get into the NCD, the bond market, and also deepen the retail bond market. Now your question is about how to put more purchasing power in the hands of people. Is that what you will say? So we have always been proponent of that. We have always been doing that only, putting more and more purchasing power in the hands of people. So one very good, great thing which everybody or people can do is to maybe do away with the cap of the loan to value for the gold loans. Today, 75% of the value only is given as gold. There's a cap on that. But if you want a car, you get 100% on-road funding. But if you give gold, you get only 75%. See what is the difference? So the full good collateral they are permitting only 50%, 75%. Actually, the credit decision should be left to the lending company. That will put a lot of purchasing power in the hands of people, monetize all the jewelry which is lying idle with the people. Today, all banks are also doing it, but it can do better. It can definitely do better. More purchasing power will come into the hands of people if the LTV, the loan to value restriction or relative restriction is lifted, and the credit appraisal, the credit decision is left to the lender. The lender takes the credit decision. Let them take whether to give 50%, 60%, 70%, 80%. And that will act. That I think can do this. And the borrowers usually are the MSMEs, the small households, the shopkeepers, the kiranas. They are people who do not have a credit score. Is one who use the gold loan. So everybody who has a credit score can get many other loans, but without a credit score, the one and easy one is this. And I'm sure, again, it's not the end of the day. It's not the end of the budgets. There are more budgets coming. There are more regulations being looked at. There are more regulations easing happening. And I think this should be something which everybody should look at it, and so that more purchasing power. Once purchasing power is there, the demand will go up. When demand goes up, manufacturing. So people are saying the industries have got good balance sheets. There's no dearth of capital. There's no dearth of private capital. All the private industries have good, healthy balance sheets. They can invest. But where do they invest? Where do they see the good demand coming? So that is something which I would think my long range or long short is that demand should go up, and for demand to go up, people should have purchasing power.
Absolutely, George. Noted your points, and for which, if they would have relaxed some, given some more incentives in terms of taxation, perhaps it would have helped. But 17,500 is not very enough for sure. Gentlemen, thank you so much for your time and the contribution in this particular show on the budget special on etbfsi.com. Wish I could have taken more questions, but it was meaningful listening to you, and the time is up. But thank you so much, George, Pranav, Sharad, Indranil, Ratan, and Manish for meaningful thoughts here. Thank you so much.
Thank you very much.
Thank you. Thank you.
Thank you. Thanks.